Shipping Corp of India. We thought we'll chat about the freight tariff, the trends based on the Baltic Index, the assessment of trade and economic indicators, and of course the traction that one is seeing in liner and bulk segment oversupply as well. So let's try and chat about all of that with Anoop Sharma, the CMD at Shipping Corp. He joins us on the show right now. Mr. Sharma, morning. Your last quarter was a good one when it came to your liner as well as bulk segment. While the industry overcapacity in tanker segment has been weighing you down, how is it that each of your segments are doing so far this quarter in terms of your capacity and vessel booking?
Morning to you and all your viewers. You're right, the last quarter was very good for bulk and liner segment. The tanker segment all over the world is doing quite bad. For last winter, we've not seen the spike, and we are continuing to see the low rates coming out in tanker. Even the VLCCs are operating below the OPEX levels, and we expect this trend to continue till about September, and we are likely to see the increase in rates in the winter seasons. And we are eagerly waiting for the OPEC meeting, which is going to happen this month, and what kind of decisions they take there. So that is going to be a good indicator or bad indicator, whatever decision they take for the tanker market.
Right, but Mr. Sharma, do you think that the trade and economic indicators have shaped up well? Are you seeing a pickup in demand?
Yes, we are seeing, as far as the global indicators are seeing, we are seeing a demand, and which is why your bulk and container, especially the container towards the west, rates are quite stable. And you can see the bulk carriers, the BDI is going up, inching up slowly because a lot of activity towards China and India both. The coking coal is coming to India, and a lot of iron ore is moving towards China. So that you're seeing the bulk carrier increase. But and this is likely to sustain for coming quarters, at least 2 to 3 quarters. And as far as the offshore industry is concerned, even though the oil prices have gone up, but Indian offshore has not picked up due to monopolistic contracts which are available, and onset of monsoon has really put down the E&P activities. So we are going to likely to see some increase in activities in offshore segment only after monsoon. So these are the 3 segments which broadly are there. As I said, the tanker segment is not doing very well for this quarter and maybe next quarter too, and thereafter we are likely to see the good increase. As far as the liner is concerned, we are very optimistic on the liner segment after this quarter, and bulk is continuously doing well, and we expect it to remain similar for next 6 to 8 months. And as far as offshore is concerned, as I said, after monsoon we'll see the pickup in this segment.
You know, the Baltic Dry Index has been very volatile, but on average the reading is better than last quarter. Do you sense that freight tariffs would be also the same compared to Q4?
That's correct. As I said, we expect to see at least the dry market, which indicator is Baltic Dry Index. It is hovering at 1395, and we expect it to cross 1500 very soon, and that will give us a reasonable returns. Of course, if it goes up, then we're going to make better money, but we expect that to be steady there in next 6 to 8 months.
So tell us a little bit more about what kind of additions are you planning to your fleet this year and the capex that you've lined up for FY 19 to 20.
As you know, we've added 4 vessels in the last financial year. We've first time in the history of SCI, we've taken second-hand vessels. We've added to our fleet, and in that we've added an LPG ship and a Suezmax tanker and 2 offshore vessels. And this year we are looking at all the segments. Wherever there is a good opportunity in the second-hand market, we will try and pick up ship. We've not zeroed on any as of now, since you know that we are in all sectors. So wherever we find attractive proposal, we'll go in for that.
Right. We wish you the very best, Mr. Sharma. Thanks very much, sir, for joining us and giving us a quick sense of how your business is shaping up and whether or not the headwinds are clearing out. Have a lovely day.
Thank you. Thank you so much. Have a wonderful day.